Welcome traders to this educational video of Trading Talk series, episode number 2. Now, if you're a trader who is possibly doing a day job, who's running a family business, who wants to trade in the market, who wants to participate in the market, who wants to compound his own money and create longer term wealth, but he doesn't have the time to sit in front of the screen. There are many people who contact me and they ask me that, is it really possible to trade with my own money, that I manage my money personally, but since I don't have a time, I slightly have a doubt that will I be able to do this or not. And due to this reason, many people feel that stock market is not my cup of tea. So if this is the case with you, then you have arrived at the right spot, at the right video. This video is exactly for you. Watch this video entirely from the start to end. Only then you will be able to understand that whether are you in a position to trade and manage your own money and live the life at your own terms. All right. So you can see the title of my video is very clearly. I've made a small mind map for all of you. So it'll be very easy for all of you to understand. And the title of the mind map says that, can I trade part-time and create wealth while I'm working full-time as a day job? I have a full-time day job, or whether I'm running a family business. So the good part is, first of all, yes, you can surely manage your money. You can see I've given the answer is yes. So now slowly and steadily we'll deal with each of the important points. And as soon as a person who is extremely busy in his life gets the answer, yes, you are able to do that, then you will have a big smile on your face. But the second question which generally arrives on your mind, in your mind, is that how much time actually will I be able to spend? How much time do I have to give to this entire process? Because an extremely busy person will always have this query going on in your minds. Well, the real answer is 20 to 30 minutes in an entire day, not more than that. And this time also you don't need to give probably at a time when you are doing a job, or when you are sitting in your office, or if you have a retail shop at that point of time. No, it is possibly in the early morning or in the late evenings or even at late night. You don't need to be working in the middle time. All right. So you can completely handle your other work from where you're getting your bread and butter. And at the same point of time, in late nights or early morning, you can do that 20-30 minutes work, and then you will be able to create wealth for yourself. Now, the third question which will obviously arrive in your mind is, if I'm spending this 30 minutes only, now where is this 30 minutes going? What I'm supposed to do in that 30 minutes? It is an obvious question, correct? So the answer for that is trading homework. Trading homework. What is trading homework? For people who are new to trading, you will have a question that, what is this phrase called trading homework? My friends, trading homework is nothing but basically, how does everyone purchase a stock? Either you people watch news channels at times. I'm talking of people who are not acquainted with technical analysis. I'm not talking about people who little bit have basics knowledge of also technicals. So basically people watch a little bit of news channel, you read newspapers, or possibly your neighbor or your relative, your friend, anyone gives you a tip and you just buy that stock like that. And you feel that, since I don't have the time, buy and hold is a perfect strategy for me. For frankly, it's not, because you don't have a control on the position as soon as you buy it. Because maximum amount of people know which script to buy when, but they don't have control over their position, how much risk, how much money should they deploy in a particular position, when to exit a position, because ultimately you are buying a stock, you're buying something to sell it at a higher price. So if the trade works out in your favor, if the trade is rallying, if the stock is rallying 20, 30%, 40%, 50%, maybe even 100%, but at least at some point the rally will end, and when it ends, you have to get out of it. That's the most important point. And you will understand while doing trading homework which exactly is the stock which I have to purchase and I have to make money with that particular stock. Now, basically the another question which will arrive in your mind is possibly that, if I'm doing this trading homework, which strategy possibly I'm going to use. So you can see the strategy used will be trend following. Now, for people who already have a little bit knowledge about technical analysis, charting, they will understand what is trend following. For people who have absolutely no knowledge, I will do something for all of you, which will be much easier to understand exactly what is trend following. So for example, currently I will just open the chart of, say, let me open the chart of any good stock, say Infosys. All right, Infosys is a heavyweight stock. So basically these two lines in front of you are moving averages, simple moving averages basically. So whenever the green line, the smaller moving average, which is the 13 period moving average, and this is the 34 period moving average, and it is nothing that you should only use these moving averages. This is just for you people to understand what exactly trend following is all about. This is not the strategy which I use or I share with my students. This is not certainly that. The strategy which I use and I share with my students is far more better than this, but at least you will get a hang of what is exactly trend following. And the most important part for me is that I want to tell you that yes, my friends, you can compound your wealth even if you are living a busy life. So whenever this smaller moving average crosses above the larger moving average, it is considered to be a bullish sign. And you can see somewhere around this, the price is somewhere around 666 levels, somewhere around that. And you will not exit the trade unless and until you don't have a second crossover when the green line, basically the smaller moving average, crosses the larger moving average on the downside. So from 666, you got an exit somewhere around at 931. So you can see roughly, we can just calculate appreciation of around 40% in a matter of April to maybe 4 5 months, 6 months, something like that. You have made a percentage gain of around 35 to 40%. Obviously in 2020 the rally was humongous in the stock market. Every year you might not get this sort of appreciation in your portfolio, but a rough expectation for a person who's doing trend following, long only trend following, because you are not going to short stocks over here. This is a long only style of trading for cash market delivery trades. The roughly expectation is between 25 to 30% on an average. But yes, there will be few years where you will be seeing above average returns coming in your portfolio. And 2020 was 101%, one of those years basically. Even if you watch a stock like say Tata Steel, say for example, you can see the buy somewhere came at around 423, and from 423 the stock has went till 730. This is a huge rally. An average holding period generally, now we'll talk on that. Let's get back into this. What is the average holding period? The average holding period I have already I had shared somewhere over here, I think so. Yeah, here it is. You can see. So the average holding period will be 1 to 4 months, and exactly the same thing you can see over here. We went long somewhere in October, and currently the month is January. Possibly when this negative moving average crossover happens, the exit signal will come in this particular strategy. And again, repeating, my friends, this is not the strategy which I use or the one which I share with my students. That particular strategy is much robust than this one and much more better. But this is for basic understanding for people who have absolutely no background of charts or technical analysis. All right. So let's get into the next question. Do I need to track the market full time? Say, for example, if you are on a job, if you're busy in a meeting with your boss, or you are running a retail shop or any other factory, which is your family business. So the main question is, क्या मुझे market time पे बार बार screen के सामने बैठना पड़ेगा? क्या मुझे Android phone पे market track करना पड़ेगा? Yes, if you want to watch once in a while, it's fine, absolutely no harm in that. but there is absolutely no necessity of doing this because this is a positional trading strategy where you don't need to be present in the market all the time. Now, which financial instrument will be used for trading? So as I repeated, as I told before also, we are only going to use cash market delivery trades. We are not trading into FNO. We are not trading into derivatives for futures and options because that is a little bit more active style of trading. I'll try to make a video on that also on a later stages. But since we are trading positional trades, cash market delivery trades, the average time period is 1 to 4 months. You don't need to be in front of the screen at all. Now, what would be the average holding period of these positional trades? As I said, 1 to 4 months. And basically, the main most important, I think, point to share over here is many people, they ask which particular stock is good to buy, which particular stock is good to sell. Do I need to read the newspapers? Do I need to, know about the channel? Do I need to know about what the company's results and everything is? Well, my friends, there is a quote by Mr. John J. Murphy. I consider John J. Murphy to be one of the best technical analysts ever existed on earth, and his first book, I think so, technical analysis of the financial markets, was one of the best book I have ever read. I have read this book around 3 to 4 times since my career started in 2006, and he clearly stated in his book that when a technician or a technical analyst is studying the chart of a particular company, he is directly or indirectly studying the fundamentals of that company. I am myself not studying the fundamentals. I purely, whatever analysis I share, whether it is on Nifty, whether it is on a stock, whatever I share is purely on the technical analysis basis. And if you're already a viewer, if you're already a subscriber of my channel, you would already be aware that I'm making multiple Nifty analysis videos. I've already completed 40 episodes of that particular series. So till this point, you must already be knowing what sort of analysis I'm doing, and I don't get involved into the fundamental analysis because directly or indirectly you are always studying the fundamentals of that particular company. So if you have a robust trading system, coming back to the main point, if you have a robust trading system which can track multiple stocks, multiple indexes, then you can make money in any market in the world. One small example I'll give you, just one small example. Let us track this particular stock. Now, this particular stock doesn't exist in US, in India, I'm sorry. So basically you can see this is a sideways move, correct? In a sideways move, generally you will not make money. Why? Because if you buy something, the price goes up, if it comes down. So obviously what is happening, the price is continuously revolving around your purchase price. So in that sort of scenario, you will not make that much of money. But if the market rallies in a certain direction, if the stock rallies in a certain direction, you will make money. And you can see what has happened in Apple over here. So this is 16th April, I think 2020, from 70 or 72, you can see the stock went up till 136, and here we have the exit. The second signal I think we have got somewhere over here, which was a buy at 120.63. In round figures, I'll say at 121, and the exit got at 114. This was a negative trade where we lost a little bit amount of money. And there is also position sizing involved. It's not just if you have a X amount of portfolio, you will deploy an entire big amount in a particular stock. No, there has to be a technique of position sizing involved too, because without proper position sizing, if you are trading, even with a robust trading system, it is not trading, it is actually gambling. So I also deploy position sizing techniques in my strategy, and same I do share it with my students also. And currently you can see Apple, once again, we have got a positive sign signal at 118.72, again saying in round figures 119. And you can see currently it has closed at 143. If you see the stock of Tesla, I'll just pick because there is no point of talking about this rally. Everyone knows that Tesla has rallied in a big way. I'll just take the recent example so you people will understand very easily. So you can see the 498 stock price in November, it has gone till 880. And are we doing any sort of derivatives, any sort of, what we say, any sort of exposure, higher exposure are we taking as per our portfolio size? The answer is absolutely no. These are pure cash market delivery trades. So coming back to the final point, if you are a person who is running a family business, if you're doing a day job, the answer is 101% yes. If you know how to read charts with the help of technical analysis, if you have a robust trading system, and if you can give just 20 to 30 minutes in an entire day, 20 to 30 minutes in an entire day, there is a very high probability that you will make above average returns rather than just buying a stock and holding it forever. Because entry and exit both are important, and out of entry and exit both, exit is the most important point. Everyone knows which stock to buy. No one knows it when to enter. And if few people know when to enter, many people don't know when to exit, and exits are very, very important. You might see a stock going up, which is in your portfolio, but if you do not exit it at the right point of time, you will not make money, because that money will be just open profits in your portfolio and you will never get it in your own hand. All right. So I hope this entire video which I have made has been eye opener for you. It has helped you, it has increased your knowledge. And if you do feel so, do let me know your views in the comment section below. Also share this video with other traders who might find it absolutely useful. I'm pretty sure there will be some people just like you who want to trade in the market, but unfortunately they feel or they think that they cannot do it due to lack of time. All right. And in my next series, in my next video of the same series, Trading Talk, I'll try to talk about a different topic. Until then, trade well.